Hello, welcome back to Learn Oikonomia. In this video, we are going to discuss a topic that is a subject matter of financial economics. So, as you all know, we have discussed the different investment strategies, the pros and cons of different investment strategies, and who to do what kind of investment. So, having said all these kinds of things, this video is concerned about what to do after identifying your investment strategy. So, after following the meaning, the types of different investment strategy you might have, and also understanding the pros and cons of different investment strategy, you might have understood. You are a person in these situations, so you would be identifying a particular investment strategy for yourself. So the video which discusses about the videos which discuss about the types of investment strategies, the pros and cons of investment strategies, and also who to do what kind of investment. All these videos will be helping you to identify the best suited investment strategy for you. So after identifying the investment strategy, what is the next step? And that is the subject matter of this video. For those people who have not watched the previous videos, this is actually a series. So if you have not watched the previous videos, I'll be providing the links of these in the description box so that you can watch these and identify your best investment strategy. Then after that, what to do would be discussing in this video. So let's get started. So you might have identified your best investment strategy. As you know, there are multiple types of investment strategies available. So you have now narrowed down the options available and you have selected your investment strategy. That is a great thing. So because now you are familiar with different investment strategies, you know the pros and cons of different investment strategies, and you know which is the investment strategy which is best suited for you. It all depends upon whether you are expecting regular dividends, whether you are expecting a big gain all of a sudden, whether you can withstand a loss. All these kinds of things would be made to form a decision. So now you have dealt with all these kinds of things and you have identified a strategy for you. Now you have to see that there are still a few things you need to understand before you make the first deposit in your investment account. Just understand a few more things. So here first you have to do is what you have to do is that you have to figure out how much money you need to start investing. This is something this decision is something which depends upon how much amount you are planning to invest, how much amount you have with yourself. So all these kinds of things would be determining to make a decision on how much money you need to start investing, and this includes your upfront investment as well as how much you can continue invest going forward. So you might be planning for a regular investment, or you might be going for a one-time investment. Whether it is one time or regular, it all depends upon several factors, right? Now you will also need to decide the best way for you to invest, whether you should consult a broker. I mean, what I mean is a financial advisor or a financial broker, or whether you yourself would go and analyze the market, and you rather than depending upon a broker, you have collected several data sets, you are analyzing these data sets and you are going for your own approach. So whether you are going for a broker or whether you are going for yourself, all these depends upon you. So you have to make decision with respect to these aspects as well. If you choose some I mean, if you are not choosing for a broker, then consider signing up with the robo advisor. Okay, so just consider your investment vehicles. So you have to see that cash accounts can be immediately withdrawn but often have the greatest consequences. So first of all, again, what I'm making you to remember is that first of all you have to understand yourself. you have to see whether you are a risk averse person, whether you are a risk loving person, or whether you are a person who is actually between these two categories. So you just see that 401 case can't be touched until you retire and have limited option, but your company may match your investment. So several factors would come to play here, whether you are on in the last stages of your retirement, or whether you have just joined your new job, or whether you are in the middle state of your work, or whether you are planning to make investment but you have not received any job. So all these would depend upon person to person, and these would differ from person to person. So you have to take all these things into consideration before making the decision how much to invest, and to choose which investment line, whether you should approach a broker or not. Now, different types of IRAs have different levels of flexibilities as well, and that also pays to remain diversified. And here also you can think whether you should diversify your portfolio or not, whether you have to put your entire sum of money into a particular company alone, or you should diversify your portfolio by investing X amount of money in one company, Y amount of money in another company, Z amount of money in another company, or you should make your portfolio much more diversified. So all these would depend upon your risk tolerance and also your wish. To reduce the risk of one type of asset bringing down your entire portfolio, it is better to spread your investment across different shares, different stocks, different bonds, different mutual funds, EFTs, alternative assets. So many people, as you can see in the present world, these people would be investing in different types of assets. They would be investing investing in stocks, bonds, mutual funds, gold, equities, some other types of assets, etc. So these choices would depend upon each and every person, because each and every person have different financial situation. If you are someone who is socially conscious, then you may be considered as a responsible investor. Now it is time to figure out what you want your investment portfolio to be made up of, and how you want your investment portfolio to look like. So it all depends upon your wish. If you are a person who would like to collect the market information, and you would like to analyze the market by yourself, then be very cautious, because if you are a person who are not that much aware of market data, then it is better to consult a broker. It is better to consult a financial broker, and that, because that person would be giving you some kind of awareness, and that person would be acting on behalf of you. What you need to do is that just give a share of your profit to that particular person. So that's it. Now, when choosing your investment strategy, you have to answer certain questions, and if you can answer these questions, so that will make you a good investor. So the first question here is, do you want to invest for a short term or a long term basis? So if you are a person who would like to invest in a short term basis, then you can choose your portfolio, you can choose your assets in the portfolio in that manner. And if you are a person who would like to invest in a long term basis, then you can choose your assets in your portfolio in that manner. Next question is, do you want your investment to be easily accessible or illiquid? So whether you want your assets in the portfolio be liquid, like money balances, like gold, or whether you would like your assets in the portfolio be illiquid. That means that you cannot easily convert these assets into money. So these would include bonds, shares, etc. Next question is, do you want to chase risk for higher returns or to avoid risk for stability? So this is something which we have all this is something where we have already started, right? The basic question here is to understand your risk tolerance, whether you are a risk averse person or risk loving person, or whether you would stand in between. So just answer that question also. Next question is, do you want to manage your own investment or pay an advisor? That means that whether you should consult a share broker or a financial broker, or you would analyze the market data by yourself, or What is your stand on this? Next question is, do you want to actively monitor your portfolio or be more passive? So this is again a very important question, because for a person who is choosing to analyze the market data by himself or herself, and not, or not choosing to pay for a broker, then what you have to do is that you have to pay attention to the market data, how it is going, and it is how it is moving up and coming down. You have to have a good understanding with respect to this. So not to get a good understanding, what you have to do is that you have to monitor the movement of the prices of these assets constantly. So here also you have to be very very careful. If you stay as passive as a market analyst, it is a bad decision. So if you would like to be passive, it's better to consult a share broker or as a financial broker. Okay, the next question is, do you want to invest a little amount over time or a lot all at once? So again we are going to the question, you are make whether you are going for an whether you are going for a one time investment, or whether you are going for a regular kind of investment, whether you are going investing little by little, or whether you are going for a one time investment. This question too needs to be answered before before you start investing. Now, what is the best investment strategy? The best investment strategy is the one that would be helping you to attain your financial goals. So, as I have already told you, the financial situation of a person would be different from another person and that of another person. So, what I'm telling is that the financial strategy that is considered to be best for one person would not be a financial strategy that would be best for you. So you have to take you have to answer the questions which we have already asked you. First of all, you have to do that. Then with answers of these questions in your hand, what you have to do is that you have to find the best investment strategy for you. For every investor, the best strategy would be different, right? So for example, you can see that if you're looking for a quickest profit with the highest risk, momentum trading is the best suited strategy for you. But if you're planning for a long term, value stocks would be a better option for you. Now, here the next question is, how do I set up an investment strategy? A general investment strategy is actually formed based on long-term goals. And here too, there would be differences, but generally it would be based on long-term goals. And you have to answer certain questions like this: how much are you trying to save? What is the timeline of your saving? What are you trying to achieve? All these kinds of things have to be answered first. Then only you can choose a investment strategy that would act as best one for you. So once you have your financial goals in place, you can set target performance on returns and savings, and then find asset that would mesh with your plan. For example, your goal may be to save some X amount of money. Then to achieve this goal, you must invest some Y per year. Every year you have to invest. You would be investing these for some, say, A number of years to attain some B% annual return. So with this information, you can analyze various historical investment performance to try and find an asset class that would achieve your strategist target. But even if you do all these kinds of things, what you have to do is that you have to monitor the market. You have to see whether you have to have some basic understanding with respect to the market performance. You have to have a basic understanding in the sense that you have to just you might be able to distinguish between whether the market is going up or whether the market is going down, whether there is a recessionary phase in the economy or whether there is a boom kind of thing happening in the economy. So you should, at least you should be able to distinguish between these two kinds of scenarios. So now, how do beginners invest in stocks? Beginners get started with stocks by depositing fund in low fee or no brokerage firm. So these companies will not charge anything. So when the investors deposit, trade or withdraw, they won't charge anything. So even if they charge, they would be charging a very low fee. In addition to getting started with a brokerage firm, you can have leverage information on broker's website to begin researching which asset classes and securities you are interested in. So this kinds of facilities would be given to you by the broker that you would be consulting. So it all depends upon your choice. whether you would like to analyze a market by yourself or whether you should consult a broker. It's always better to consult a broker, because if you are getting profit, you can give a share of profit to that person. If you're getting loss, that person, I mean the broker too, would be responsible for that loss. So having said so, we are ending this video. Please like, share and subscribe to this channel, and you can be a part of my Telegram channel and Telegram group to discuss your doubts. I'll be providing the links of these in the description box. I hope now you are ready to make your investment. You have answered all the questions which we have asked you. So if you are with me, if you are able to answer all the questions, if you know your financial situation, if you know your risk tolerance, if you are able to make your mind with respect to whether you should you should analyze a market by yourself or you should go for a broker. So if you are able to answer all these kinds of questions, now you can make your first investment right now itself. Okay, so I think you have made up your mind and now you can go for investment. So um, that's all for today. I'll be providing the links of the previous video where we have discussed the other aspects of financial market and financial economics. So you can, if you have not watched those videos, please you can pick those things from the description box. So please do that as well. So that's all for today. Thank you for watching. We can meet with a new video, a new topic. Till then, bye.